Good morning, everyone, and happy Friday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. I am here Monday through Friday with videos out before the opening bell, so make sure that you're subscribed to the channel and turn those notifications on so you can stay up to date with all of our latest videos. Also, don't forget to check out some of the links in the description down below, including a link to the TipRanks mobile app for your Android or Apple device. This way you can stay up to date with all of the latest market news and analyst ratings on the go. All right, now today we're going to be looking at exciting stock market news, this morning's biggest gainers and losers, as well as some notable earnings reports. So let's get into it. Starting off with stock market news. U.S. stocks are set to open in the green this morning ahead of retail sales data that will provide insight into consumer spending. Dow futures are currently up 0.45%, S&P 500 futures are up 0.65%, and NASDAQ futures are up 1.1% so far. The CDC has announced more relaxed guidelines for fully vaccinated people, saying they can largely do away with wearing masks indoors and social distancing. The announcement follows the latest science that shows being fully vaccinated does cut the risk of being infected and spreading the disease to others. Google's parent company Alphabet has to pay 102 million euros for abusing its dominant market position with the Android operating system and the Google Play App Store. According to the Italian Competition Authority, the internet giant has been using its influence to control app developers' access to end users. The 102 million euro fine stems from claims that the internet giant denied Enel X Italia an opportunity to develop a version of its Juice Pass compatible with Android Auto. According to the regulator, the blockade made it impossible for end users to use the Enel X Italia app while driving and recharging their electric cars. In other Google news, they have won a pair of cloud computing contracts with SpaceX and PayPal. SpaceX has tapped Google to provide the cloud infrastructure to deliver its satellite-based broadband service to global customers. The arrangement will see SpaceX's internet subsidiary Starlink set up its ground stations inside Google's data center facilities. Starlink operates more than 1,500 internet satellites. In another big win for Google, the company will provide more cloud services to PayPal to enable the payments company to increase its capacity to process a larger volume of transactions faster. The Google stock does come in as a strong buy with an average upside of about 24%. Shares of steel-producing company Nucor popped 5% on the announcement of their new share repurchase program worth up to $3 billion. Nucor and its affiliates are manufacturers of steel and steel products with operating facilities in the United States, Canada, and Mexico. This new program, which has no expiration date, replaces the earlier authorized stock buyback program worth $2 billion. Approximately $1.55 billion of the stock had already been repurchased under the company's old program. After solid growth in May, the stock currently has an average price target that has already surpassed most, so now has a downside of -7%. The most recent rating came in yesterday with an upside of 16%. Indus Realty Trust has acquired an industrial and logistics building in Pennsylvania for a consideration of $11.7 million, excluding transaction costs. Indus chiefly engages in industrial and logistics properties and owns 42 buildings in addition to more than 3,400 acres of undeveloped land. It funded this acquisition with cash in hand. The acquired facility is a fully leased 127,500 square foot industrial logistics building. Their stock comes in as a moderate buy with an average upside of 15%. Business-to-business rental company McGrath RentCorp has agreed to acquire Design Space Modular Buildings in a deal worth $260 million. McGrath RentCorp estimates the acquisition to be accretive to its bottom line and free cash flow upon closing, and it expects the transaction to close in the second quarter of 2021. Design Space provides modular building and portable storage in the Western U.S. through 15 branches. The company has a rental fleet of about 6,400 units with a total initial cost of $140 million. The McGrath RentCorp stock only has one current analyst rating, and it is a buy with a 9.6% upside potential. Now let's take a look at this morning's biggest gainers and losers. Starting off with our biggest gainer so far this morning, which is BIOLACE. Under the ticker BIOL, they're currently up over 25%. followed by Fisker under FSR, who's currently up nearly 17%, and Ellis Game Technology under ELYS, currently up 11.5%. Our biggest losers this morning are led by CorMedix. Under the ticker CRMD, they're currently down 29%, followed by IZEA Worldwide under IZEA, currently down 23%, and Plantronics under PLT, currently down nearly 20%. Moving over to some notable earnings reports. Starting off with Alibaba, who posted their first ever loss. Their revenue came in at 187.4 billion won, increasing 64% year-over-year and beating the consensus estimates of 179.9 billion. The company's flagship commerce business continued to be a bright spot, with the pandemic accelerating the shift to online shopping. Alibaba finished the year with 811 million active shoppers on its China retail marketplaces, marking an increase of 32 million from a year ago. Now, although business appeared to be booming, Alibaba reported an operating loss of 7.7 billion won, marking its first quarterly loss as a public company. A major contributor to the loss was the 18.2 billion antitrust fine that Chinese regulators slapped on the company back in April. Despite this loss, the stock still comes in as a strong buy with an average upside potential of 48%, with many analysts reiterating those price targets yesterday and today. We also heard from Airbnb, who came in with some mixed results for their first quarter, as their revenues increased but losses widened. Airbnb posted revenues of 887 million, up 5% year-over-year, and beating estimates of 717.8 million. However, the company saw losses widen in the first quarter to 1.2 billion, or a loss of $1.95 per share. Analysts were expecting a loss of just $1.05 per share. Their stock comes in as a moderate buy with an average upside of 42%. We have hold ratings from today that came in with still a 21% upside potential. And we also heard from Walt Disney, who reported their second quarter results with lower than expected revenue and subscriber counts for their streaming service. The company reported earnings per share of 79 cents versus 27 cents expected, and revenue of 15.61 billion versus 15.87 billion expected. The company missed on subscriber estimates for their Disney Plus, coming in at 103.6 million paid subscribers when it was expected to post 109 million. Their stock comes in as a strong buy with an average upside potential of 20%. The rest of the day is fairly quiet for earnings reports. Early next week, we'll be hearing from some big names like Walmart, Home Depot, and Macy's. So that is everything for Friday's pre-market morning update, bringing you up to speed with what you need to know before the market opens. If you enjoyed today's video, make sure you hit that thumbs up button and say good morning in the comments down below. You guys know I always love hearing from you. Thank you so much for watching. I hope you have a great day and a fantastic weekend, and we will see you back here next time.